Hello and welcome back to the GEP Investor channel, where we deep dive into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, we are going to have a look at my dividend portfolio and see how much money it paid me in the first month of the year, January of 2025. Before we get into the individual stocks that paid me in the month of January, I'm going to show you the overview of my portfolio to see how it performed over the last month. At the end of December, we had a portfolio value of £34,749, which was a 22.4% overall rate of return. And by the end of the month, as you can see on the screen, we have a total portfolio value of £39,126, which is an increase of £4,377, which is an overall rate of return of 29.6%. Having said this, it's very important to note that I have put a lot of my own money into the portfolio over the last month, as I did see some good opportunities in the month of January to invest further into the stocks that I have in my portfolio and also the ETFs. So due to that, alongside the gains I made, it meant that overall for the month we were up over £4,300. Moving on, we're going to have a look at the first stock that actually paid me a dividend in the year of 2025, and that was none other than Nike, stock ticker NKE. I currently have 19.5 shares of Nike, an average cost per share £60.58. So my overall current value of holding is £1,167.97. Overall, we are currently up £11.45 on the position, which is also the equivalent of 0.99%. And we received £2.58 in dividends from this stock, meaning overall, we are currently up £14.03. Nike pay a dividend 4 times per year, have a dividend yield at 2.15%, and a very nice 5-year growth rate at 9.64%. They paid me the full £2.58 this month from them, as it was my first payment I received from this stock, as I only just invested in them a couple of months ago when they had that share price dip. This means overall for January, we have received £2.58. The second stock to pay me in the month of January was JP Morgan Global Growth and Income, stock ticker JGGI. I currently have 500 shares of the stock, an average cost per share at £5.79, and my current value of holding is £3,020. My total returns, I'm up £131.98 on my position, and we received £5.69 in dividend payments from them. They pay a dividend 4 times per year, have a dividend yield at 3.77%, and a phenomenal 5-year dividend growth rate at 11.72%. Out of that £5.69, coincidentally, this was actually my first payment I received from this ETF as well, so I got the full £5.69 this month. This brings my overall January dividend total to £8.27. Next up, we have JP Morgan Global Equity Premium, stock ticker JEGP. I have 45 shares of this stock, an average cost per share at £21. My current value of holding is £964.35. And overall, we are currently up £19.59 on the position, and we have received £7.09 in dividend payments. So overall, that means we are up £26.68. They pay a dividend every single month and have a very big yield at 6.36%. They don't currently have a 5-year dividend growth rate, and that's not because it's in the negative or anything of that concern. It's just simply because the stock was only formed just over a year ago, so there's not enough data yet to have a 5-year dividend growth rate. From that £7.09, we received £3.47 this month, bringing my overall January dividend total to £11.74. I'm really excited to announce that today's sponsorship is from none other than a really cool dividend tracking app called Snowball Analytics. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Rolls Royce of portfolio trackers. I have personally been using this app since the start of my investing journey, and I'm extremely impressed by how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I find the platform very easy to navigate. Plus, it's packed with so many different charts and graphs that do all the hard work for you, so you can really understand different aspects of the portfolio. It not only dives deeper into your own personal portfolio, but also into individual stocks as well. Pretty much anything you want to know about a company's financials or dividend history can be found here within the Snowball Analytics app. In my opinion, what really sets Snowball Analytics apart from the rest is the features that it has designed specifically for dividend investors. This app tracks your portfolio so closely and has a very robust event calendar that shows you all relevant information you need to know about your stocks, as well as potential income coming in, and it predicts the income you are likely to receive in the future as well. Not only that, it adds total returns to your stock with the dividends you have also received, which no other dividend tracking app can do. This is so important as it can really show you the bigger picture and highlight how well your portfolio is actually performing. If you are interested, then please click my link in the description to check out Snowball Analytics. You can also get a free 2-week trial so you can try it out for yourself first and see if it's for you. Let's get back to the video. Next up in the month of January was VICI Properties, stock ticker VICI. I now have over 100 shares, being at 108 shares of this stock at an average cost per share £23.29. This is the biggest singular stock in my entire portfolio, with a current value of holding at £2,609.72. They've just seen a little bit of an increase in their share price, so we are now up 5.8% or £143.85 and have received £74.83 dividends, meaning overall we have got an unrealised gain of £218.68. Their dividend frequency is 4 times per year, and they have a very nice dividend yield at 5.77%, alongside a rather healthy 5-year dividend growth rate at 6.64%. And from that £74.83, we received our biggest payment to date from this company, being £24.74 for this month, which adds a lot to that January total, now up at £36.48. The next stock in the month of January to pay me was National Grid, stock ticker NG. I currently have just under 100 shares of this stock at an average cost per share at £9.82. So my overall current value of holding is £930.62. My total return on this stock is £35.14, alongside my dividends being at £39.72. So overall we are up £74.86 on this position. And they pay a dividend twice per year, have a dividend yield at 5.67%. And a slightly disappointing 5-year dividend growth rate at only 2.82%, although it is still slightly above that 100-year average inflation rate. The dividends I received from this month was £14.04, bringing my overall January dividend total to over £50. The penultimate stock to pay me in the month of January was Realty Income, stock ticker O. We have 19 shares of this stock at an average cost per share at £42.59. My current value of holding is £841.78. We have a total return on this position at £47.09, being up 5.91%. And we've received £29.95 in dividend payments. So overall, we're up £77.04. They pay a dividend every single month and have a dividend yield at 5.76%, but a very disappointing current 5-year dividend growth rate, slipping below that 2% now at only 1.73%. So something I will be keeping an eye on with this stock, because if that is to stay below 2.5%, then I will be reconsidering this position and potentially looking to sell out of it to invest in a different stock that aligns with my criteria when investing in a dividend stock. I did receive £3.31 from Realty Income this month, bringing my overall January dividend total to £53.83. Finally, in the month of January, we received our final dividend payment from GlaxoSmithKline PLC, stock ticker GSK. We did have 41.12 shares of this stock, but towards the end of last year, we sold out the entire position for a sell price of £13.43. We ended up receiving a total capital gains of negative £80.21, but did receive £13.35 in dividend payments, meaning overall we had a realised loss of minus £66.86. It's slightly disappointing to sell out this position while it was down, but I felt like the core fundamentals of this stock were sliding away from what they were when I initially invested in them, and they did not meet the criteria for the dividend stocks that I was happy to invest in my portfolio, and I was happy to sell out of this position at a slight loss so that I could reallocate that capital into different stocks. The final payment I received this month from them was for £6.17, bringing my overall January dividend total to £60 on the dot. What does this mean? If we have a little look so far, we can see on the graph that So far in 2025, we have received £60 in total. So by comparing this to what we received in 2024, only £6.51, now receiving £60 in 2025 is very, very promising and just shows what the portfolio can do if you continue to invest and stay consistent in the market. I can't wait to see how my portfolio develops throughout 2025 and hit some big new milestones throughout this year and be able to compare it with last year to just show you how much the portfolio can come on within only 1 year. I hope you enjoyed today's video. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Please share your thoughts in the comment section down below and let's grow this community together. Until next time, keep compounding and stay patient because your future self will thank you. This is the Geordie Pig Investor, over and out.